The economy doesn't crash by accident. It gets shut down slowly by people you'll never see. And by the time you realize what's happening, it's already too late. You were told the economy is driven by supply and demand, that prices rise and fall naturally, that markets are free. But that's not the full story, because behind everything, there's a system controlling the most important variable in the world. Money, not how much you have, but how much it costs to get it. And that one variable controls everything. And no, it's not random. It never was. The Federal Reserve, you've heard the name. But what it actually does is very different from what people think, because it doesn't just manage the economy. It controls the speed of it. And once you understand how, you start to see patterns that most people completely miss. Let's start with the simplest idea. Money is not just money. It's fuel. Fuel for businesses. Fuel for growth. Fuel for expansion. Fuel for risk. Fuel for everything. And whoever controls the price of that fuel controls how fast the entire system moves. When money is cheap, everything accelerates. People borrow more. Businesses expand faster. Investors take bigger risks. Consumers spend more. Asset prices rise. Confidence grows. And it feels like everything is working. Like the economy is strong. Like opportunities are everywhere. But what most people don't realize is that this phase is not always real growth. It's often engineered, driven by one decision. Lower interest rates, cheaper money, more borrowing, more movement, more expansion. And you feel it. You feel it when everything seems easier, when money flows, when prices keep rising. But then the shift begins. Rates go up. And suddenly, everything changes. Loans become expensive, spending slows down, businesses pull back, hiring freezes, markets lose momentum, and people start asking the same question. What happened? Nothing happened. The system tightened. Now think about housing. When rates are low, a house feels affordable. Monthly payments are manageable. More buyers enter the market. Prices go up. Now take that same house and double the interest rate. Suddenly, the monthly payment explodes. Buyers disappear. Demand collapses. Prices stall or drop. Same house, same location, different outcome. One change, the cost of money. And you feel that too. Higher payments, higher pressure, less opportunity. And this is where most people completely misunderstand what's happening. Now zoom out. This doesn't just affect housing, it affects everything. Businesses, stocks, crypto, your opportunities, your future. Because markets don't move randomly. They follow liquidity. When money flows, assets rise. When money tightens, everything struggles. And this is where it gets more interesting. Because interest rates are only one part of the system. There's another tool, more powerful, less understood. Money creation. When the system starts breaking, the Federal Reserve doesn't just adjust rates. It injects liquidity. It creates money, digitally, out of nothing. And when that happens, markets react immediately. Prices rise. Assets recover. Confidence returns. But here's the part nobody tells you. This system doesn't just influence markets. It decides who gets richer first and who gets left behind. Because that money does not reach everyone equally. It enters the system at the top, through banks, through financial institutions, through markets, which means the people closest to the system benefit first. Asset prices go up, stocks rise, real estate rises, wealth increases before it ever reaches you. And by the time it does, the damage is already spreading. Because there is always a cost. There is no free money. When more money enters the system, each dollar becomes less valuable. Prices go up. Your purchasing power goes down. And you feel that every time you go to the store, every time rent increases, every time life gets more expensive. But most people never connect the dots. They feel it, but they don't understand it. So the system repeats. Lower rates, expansion, higher rates, contraction, money printing, stabilization, then tightening again, over and over and over again. A cycle, not random, not accidental, a system. And once you see it, you can't unsee it, because suddenly markets stop looking chaotic and start looking controlled. You stop reacting emotionally and start observing patterns. You start asking different questions. Why is money getting cheaper right now? Why is it getting more expensive? Where is liquidity going? Where is it leaving? And that's when everything changes. Because most people will live inside this system their entire life and never understand it. They will react late. They will follow headlines. They will feel the effects after it's already too late. But the people who understand the system move differently. They don't wait. They don't guess. They watch the flow of money, and they move before everyone else. And once you see it, you realize something uncomfortable. The system was never built for you to win first. Subscribe if you want to understand how money really works, Because once you see the system, you start seeing everything differently.